Hello, 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 and welcome to this very special edition of the Rent to Rent Success podcast. This is the first time ever we have got a finance rock star here for you today. We're joined by Shaz Ahmed, who is a property finance specialist, a networking whiz, a public speaker, and publisher of fantastic finance updates on social media, all of it, but especially on Instagram. And what Shaz is going to give us a different perspective today. Mainly, we usually focus on rent to rent, but I know that you're also interested in buying your own properties. And so Shaz is going to help us dive deep into what we should be doing on that side of things. So welcome, property rockstar Shaz Ahmed.
Thank
Hello.
you for having me, Stephanie. Thanks for having me. How are you? You okay?
I am really good, thank you, Shaz. So excited,
Awesome.
delighted to get into this today. And guys, if you're watching or listening, please do put any questions that you want to ask Shaz in terms of, in terms of buying properties, property finance. This is your man. So before we
Yes.
do dive into this part of things, Shaz, let's talk about you. Do you want to tell us a little bit about yourself, Shaz, and your background?
Of course, yeah. So I've been in finance, in property finance for the best part of 10 years. I used to work for Barclays back in the day, and that was more in a call center, just churning business. They actually made us redundant a couple of years ago. And then I moved to a more commercial brokerage, and that was a real big change. So I didn't know what a HMO was, didn't know what rent to rent was. All these strategies were new to me. And I didn't even
Yeah,
know what networking was, really. We didn't do that in Barclays. So that
yeah.
was literally sink or swim. It was basically a case of learn on the job and just get on with it.
Uh-huh.
And yeah, I picked it up. I kind of picked up the people buy from people. So you got to put yourself out there. You got to make yourself uncomfortable.
Yeah.
Um, and I guess I'm quite lucky that I'm good at social media. I can kind of put out content that people like, and it helps me get clients. So yeah, the investment stuff is a lot more interesting than residential mortgages. I'll be honest. Um,
Yeah.
but at the end of the day, trying to help people and sleep well at night.
Fantastic, fantastic, Shaz. And when you first got into this line of business, it's different from being behind the phones, and it's a lot more interactive and personal. And
Yeah.
so were you always sort of the extroverted character of networking, or is that something sort of you've had to sort of push yourself into?
I'll be honest, I'm really shy and I'm still shy now and I'm still quite reluctant at networking. But then and again, there's a post on my Instagram. I've said, you should always try and be memorable. So if you're not the most smartest person or the most richest person or the cleverest, be memorable. So for me, what that means is leaning into my personality. So if I, if I watch cheesy rom-coms or if I own a burger restaurant, if I've got something that's unique or memorable, that's what I should be pushing because that's what they'll remember, as well as the value adding conversations about finance as well. So I'm still quite
Yeah.
shy. If I go to a room where I don't know anyone, I'm still a bit like, how do I start a conversation? What am I going to do? But again, I've been blessed where the events I go to, either I'm speaking at the event, so already there's that built-in reputation,
Mm.
or I know certain people are already there, and I kind of just segue into a conversation because there's people who I'm familiar with.
Well, everyone's asking, where's Shaz? Let's face it, everyone's looking for you now when you go in.
Yes,
Speaking of
yes.
which, you are prolific on Instagram. I love your content on there. I was just saying, you really dive deep and explain some of the nitty gritty of how lending works. So it's great. So it's Instagram.com, obviously, and it's / where's Shaz. So do check out Shaz on Insta if you like to hang out there. So what we thought we'd talk about today, Shaz, is that people may start off in rent to rent or other strategies and then be looking to sort of buy their first investment property. Sometimes in our case, the field that we're in, they might be trying to buy their first HMO. So let's start there. What should people think about?
So when you're looking to purchase property, always start with the end in mind. So key things are patience. You need a deposit. If you don't have that deposit, then wait 5-6 months and get that deposit. So really, at the moment, on a HMO, you'll need a good 25% deposit. Okay, and that's on a small HMO, 6 beds or less. There are some people doing larger. The other thing is experience. Okay, so if it's HMO specifically, a lot of lenders will want you to have 2 years landlord experience, because for them, HMO is more complicated and more hands-on than a single let. So 2 years. There are some who'll be okay with 1 year, and then there's literally one lender who'll do it with no experience as long as you own a property. And that's where using a broker comes in, just to understand and filtering through. The other thing I'd say as well, guys, and I say this all the time, is ignore the interest rate. So when people say, what's the interest rate? Well, look, especially when it comes to specialist finance, criteria is more important. So if you've got, for example, if you've got bad credit or if you've got no income, then the lender that's going to lend to you is the lender that's going to lend to you regardless of the rate. So they focus on the criteria, not the rate.
That is good advice.
And I think it's also, and also, guys, just buy a scanner. The amount of investors I speak to who don't have scanners. So, your broker, so we all do stuff remotely on emails and phone calls, and eventually you're going to have to send in some documents, and it's absolutely no good sending in a photo of your passport or, a photo of your bill on a nice wooden table. Lenders don't want to see that. It needs to be a clear scanner. A scanner costs about 50 quid.
Yeah.
I'll just buy a scanner, okay? And also, it's good to be on top of your credit file. A lot of people don't realize there's things on your credit file that could literally make you unmortgageable. So, for example, you could have moved houses a few years ago, but somehow still be registered at your old address. That'll cause issues. Or if you've been in a relationship and your partner or ex-partner has got some financial issues, bad credit, that can bleed into yours as a financial association. So I would say at least once every 6 months or more, if you're looking to get some finance, is look at your credit file. There's a website which is www.checkmyfile.com. It's free, and what that does, it'll give you the files from Experian, Equifax, and TransUnion all in one. So once you've got that, download the file, and it's free.
That's great.
So those are the ones that lenders mainly use as well.
It's great that you can get all three in one. I was unaware. I thought you'd go to ClearScore for one, and then Karma for a different one, and but
that's the thing. So ClearScore, but that's the thing. ClearScore, Credit Karma, and Nodal, whilst they're user friendly in terms of the interface, lenders don't use those. They'll use Equifax or Experian, which are a bit more old school, but that's what they look at. And what you'll find is all these agencies will have slight variations in what they're reporting. So Experian, Equifax, those are the only real two, but use that website to get those all in one.
Oh, I was under the impression that ClearScore and Karma and Nodal were getting their information from Experian and Equifax, but what you're saying is that's not the case.
So yes and no. They're pulling information that's publicly available on those reporting websites. However, they're not always the most accurate. Most accurate is Equifax and Experian, honestly.
Yeah, and then next level, if you just want the free overview of all of them, is the best is Check My File.
Yeah, brilliant. And then when you're going to speak to your broker, is get that as a PDF file and send that to your broker. They can just assess it and see what's what.
Great. Can I just ask you to just move into view, because you're sort of slipping off the edge of the screen.
To frame.
So that's great, because that's the fundamentals, that's the starting point. So you've got your credit score. Now, say if somebody got their credit score back, this is a question that I get quite a lot about bad credit. And I know that there are lots of different things that people can do, but from your experience, what are the key things, or just give us a few key things that people could begin to do if they want to bring up their credit score?
So it's a weird one, because you don't want to encourage people to take out extra credit if they don't need to. However, what we found is if you take out a small credit card, deliberately have a small limit, maybe £500 for the month, just use that for your petrol, something quite specific, and pay it off in full each month. What you'll find is over 6 months, that'll improve your credit score. Also, make sure that you are on the voters roll for the property that you're actually living in.
Yeah.
You'll be surprised. a lot of people are quite reckless about that. They don't really want to change or add themselves on, but it's quite important to do that. Those are, I think, the two key things that improve your credit is getting some small credit and paying it off each month. Because sometimes having no credit is actually as bad as having bad credit, because there's no way for a lender to assess whether you can handle debt.
Yeah. Well, one of your fans is in. Shaz is in the house. We've got a bit of excitement in the comments.
Wow.
But I can't see the name. So that's great. So you've got your credit file now. You've got your, you've improved it if needs be. I was going to ask you about, yes, experience. Now, what we were advised when we were first buying properties a few years ago, commercial properties, was that lenders will only lend to people who have experience of managing this type of property that they own, that they wouldn't accept experience of managing other people's properties. Well, they're not down with OPP, but what's your experience of that? When people are buying their first HMO, for example, or commercial, and they have experience of managing a portfolio for other people, but they don't own that type of property themselves, have they been successful there in getting the finance, in your experience?
Yes, yes and no. It's case by case. So when it comes to HMOs, because it's rental property, as long as you own a property, that could be the house you're living in, or it could just be another rental property, you can get a mortgage with Kent Reliance. They'll do first-time HMO landlords. When it comes to commercial, then actually the experience can be leveraged with the right lenders. So, for example, you can go to a lender like Shawbrook Bank or Hampshire Trust and say, look, we can evidence this experience, we can evidence the company, the turnover, and now they just want to move into ownership. What do you think? We can leverage that. But you'd have to own something, though. You'd have to at least own your own residential. So the important thing is, when you are a first-time landlord, but you own your own home, that's actually fine because you own a property. But when you're a first-time buyer and a first-time landlord, the risk from a lender's point of view is that you might just move into that property because it's on interest only. So to mitigate that risk, what they would do is they'd only lend you the money as if it was a residential mortgage. So how much could you afford based on your income? And that's, again, where some investors fall a bit short.
Yeah. So depending on what the particular case is, they might be better off to buy a home to live in first and then go on, depending on the circumstances.
Or if it's, for example, if it's a buy, refurbish, refinance project, then technically by the point of refinance, they own that property anyway. And that ticks that box as well. So people often say, oh, bridging too expensive. Well, actually, by doing bridging, you're ticking a box of ownership as well.
That's a great little tip there. I just thought I would ask that about the experience, because that's what we were told when we were, as I say, starting off in buying. But we did actually find it all depends on how your broker can not paint your story to the right lender, I think. And we were, because we did have a lot of experience managing, commercial properties, not commercial properties, but HMOs, big HMOs, multi-unit blocks, and all of this sort of thing, that we were then able to make the purchase as well, even though we didn't own that commercial type of property. When we bought the first one a few years ago, we didn't own that type of property. So I was interested. Well, what I found when we were borrowing is that it's much more in depth than you think it will be, or than I thought it would be, because you hear people talking and you think, oh, they must be exaggerating. But no, they're not really exaggerating. I remember one of the we sent our personal bank accounts, and you've got to send some bank statements for all your different businesses that are relevant to the application, plus all your personal bank accounts. And they sent mine back. They emailed back about my personal bank account to say, have you got any more personal bank accounts? Because we don't feel there's enough transactions going through this account. But I did only have the one account. But I don't, I love property, I'm not really out buying shoes. But Um, so tell us a little bit about how people can prepare for, what do you like your clients to do? For example, when they come to you, they're giving you their information, you've chosen a lender. How do you think people can best prepare for moving forward through the application?
Sure. I just want to go back on one thing you said actually. So yeah, when it comes to using brokers, especially for more complex cases, it is all about positioning. So packaging or positioning or painting a picture, as it were. And in line with that, in terms of what I'd like from clients is tell your broker everything. So for example, if you have had a
Mm.
missed credit card payment 6 months ago, you may not think that's relevant, but tell the broker, because the broker can position that, because there's nothing worse than the underwriter coming back and saying, "Oh, we noticed that happened. You didn't tell us about that. What's that about?" It kind of, you lose credibility then. So yeah, all the information up front, and then just a clear set of documents. So deposit. This is my deposit. This has been in my account for 3 months. This is my bank statements. If there's any large transactions, explain them straight away. Yep, this was money from my mum or my dad or whatever. Explain them away. Next thing is your proof of income, proof of address. And it is strange, like you said, even for a buy-to-let property, they want to have your proof of income, even though the rental is going to cover the mortgage. They want to know what you were, and they want you to evidence that as well. So proof of income, proof of address, and just be open to answering these questions. Some people say, well, it's too long or it's a full fact find. Why is that? The more information you give up front, the less questions the broker's going to ask you every other day. And it is all about packaging and positioning. So I tend to, if I'm honest, I tend to keep my number of clients quite small, just so I can give them all a bit more TLC, and be more thorough with them and update them all through the process. If I had a lot more clients, I'd lose that service. But yeah, I think expectations are important. So it's understanding that right now, for example, lenders are absolutely swamped with cases. So whereas before you'd maybe get an update every 3 or 4 days, you're now lucky if there's an update once a week. Now,
3 or 4
as an
days.
investor, you might say, look, I'm in a rush. Yeah. So, you might say, can you chase it? Can you chase it? Yeah, I can. But all it's going to do is add another task to the poor underwriter's desk. So actually, just patience. You will get there in the end. Just set expectations for everyone involved in the chain. And also, use the right team. So, obviously you got your brokers, but you also got your solicitor and your accountant. Just make sure they're on the same page. They understand what you're doing in terms of finance, especially when it comes to complex transactions. So commercial, for example, that you mentioned, you may not be best served by using your solicitor who did your residential mortgage, because they may not have a clue about commercial. It's completely different. And the same with accountants again. So use a property tax specialist.
Yeah, absolutely. I mean, sometimes even the solicitors who were recommended for commercial, don't really understand what's what. But yeah, definitely, you've got to have specialists for every aspect of this. What I've seen is it's very detailed, but once you've done it the once, you've got everything all set up on your Google Drive, and you can easily share the folder, and you've got the whole picture painted. Although, of course, you've got to update it, every time, because they're wanting the previous 3 months. But what you said last time is not going to cut it. So that was very useful, Shaz. And you gave us a couple of really important tips there as well. And what I was asking you about is, when you're doing rent to rent, oftentimes you get opportunities for lease options or exchange with delayed completion. And I was just explaining that although this isn't something we were specifically focused on, we've got 4 of those since we've been doing this within the past 4 years, just minding our own business, going about our normal rent to rent business. And I was asking you about, do you help people to exit from the lease options, i.e. to buy the property at the end? And could you tell us a little bit about that? I think you've got an example there.
Yeah, so typically, like if you asked me this question last year, I would say you either have to take a bridging loan out and go on the bridging loan against the open market value, hold it for 6 months, and then refinance, along with the associated costs. So 1% a month, 2% arrangement fee, £3,000 upfront fee. So it's a costly way of doing it, but it's possible, and then refinance. However, I've just got a case to offer last week with a commercial lender called Hampshire Trust. Client took out a lease option. He then spent £70,000 of his own money doing the refurb and adding the value. Hampshire Trust were happy to lend on the true value of the property, even though the option price was much, much lower. I've worked the numbers out, and actually he's getting a free property. He's getting all his money back and then some. So the reason they were happy to do that was because the option itself was tidy, but also we could evidence it was his money that was spent to add that value back in. And actually, it's quite a peculiar case. So he's also renting it out as serviced accommodation as a short-term let. So it's not even a standard single let. It's a nice deal. I'm not saying you can do it every time. It's not for everyone. But if your lease option is kind of watertight and you've added the value, then yeah, there is lending available to lend on the true value.
That is gold dust right there, because I think most people would have thought what you originally said about the bridging and then refinancing, which is very expensive. But not only that, it's uncertain, because sometimes you might have complications on the refinancing, and we know that these things are not quick. So it's very interesting. So you're the man, really, for the lease options exits to definitely have a chat to talk about that. So that's brilliant. And another thing that you said actually surprised me, because I was thinking actually that now lenders would be a little bit quieter now that it's calmed down after all the bounce backs and all of that. But you're saying no, that they're sad out.
Yeah, so it's volume of business overall, but also not everyone's actually back in the offices yet. Some people have been furloughed, some are still working from home. Yeah. So it's work volumes, but also not staffing levels. And it's difficult times for lenders because now they are having to assess documents in more detail. So, for example, residential mortgage lenders, if you're self-employed, they're now putting you under more scrutiny. They're checking your income during the pandemic period to see if it's sustainable. And the other thing you're finding as well is, like, you can have a lender today on a residential go to 95% loan to value, and because they're the only one doing that, everyone's applying for that mortgage for the next week. They get too busy, they pull out of the market. Next lender does the same thing. So there's no real stability. It's difficult to actually get the high levels of volume that you need.
Yeah, okay. And I know that you said earlier, don't ask about the percentages, don't ask about the rates, ask about the criterion. But of course, we are always interested in the rates. So tell us a little bit about what is typical at the moment. There's no typical.
There is no typical, but no, subject to criteria, subject to your circumstances. If you are buying a buy-to-let in your personal name, I would say rates are as low as they've ever been. You can get a 2-year fixed for about 2%, a 5-year fixed for about 2.5%, 2.7%. That's in a personal name. If you are applying in a limited company, rates are higher. You're looking at about 3.09%. I think is the headline rate right now, a 2-year fixed. Speak to an accountant, because the lower interest rate, but you may end up paying more tax. So speak to an accountant about your overall long-term plan. And that's why I always say, think with the end in mind, because you get some people saying, well, can I put this property from my personal name into my company? Yes, you can, but it's classed as a purchase, which will attract stamp duty and all everything else.
It is so important to join up all the dots. That's something that we're in the process of at the moment, Shaz, with our... we already have, obviously, a bookkeeper. We've got a property specialist accountant, but we are in the process of talking to a property tax specialist as a consultant, just to check out what our plans are. We have some ideas for structuring. Obviously, we want to run that by somebody that's all they do is property tax. Just so that we've got the right end in mind in the way that we're set up now, because we've got several different SPVs and we've got different businesses. And we have had a question actually, Shaz. And it's from Adi Kambi, and she's saying, what's the criteria for buying as a limited company?
Okay, sure. So the company has to be generally an SPV, which is a specific company set up for property trading. It needs to have the right SIC code. So the SIC code essentially explains what the business does. and it should be for, I think usually it's managing real estate is the most appropriate one normally. Deposit wise, you need to have 25% deposit. There's no one doing less deposit right now. Anyone who says they are is lying, I'll be honest. Okay. Even though it's a limited company, all the directors will have to be on the mortgage and give personal guarantees. So you are all liable for the mortgage itself. And a lot of lenders actually will also want to include any shareholders. So if you've got shareholders, maybe 25%, smaller shareholders, they'll have to be part of the mortgage as well. In terms of criteria, then it's again back to you as an individual. So income, landlord experience, all that sort of stuff. In terms of experience, it doesn't matter if you own properties outside the company, in a different company, or in your personal name, that still counts as experience for this new company.
Okay, brilliant, thanks. And we've had another hello, but we don't have a name on it. So say evening to you. Thanks for joining us this evening. And Shaz, we cannot have a discussion without talking about the bounce back loans.
Bounce back loans.
So give us your thoughts on about bounce back loans. How are you seeing that affect lending decisions?
So yeah, it's ever changing. Lenders are changing their minds around it. I've had a few cases declined where people have taken the bounce back loans, but then I've had a few that have been accepted because the rationale is there. So I can give you the examples. The one that's been okayed by a lender, the client took £8,000 for a bounce back loan. And the reason was he was finishing up a development of the property he wanted to remortgage. The bridging lender that was funding him, they were slow. So he took out that loan more as a cash flow cushion. They've now paid him so he could pay that loan back. So in essence, he wasn't a struggling business. He's not in any kind of difficulty. They were happy to lend. On the other hand, I've got other clients who've taken out larger amounts, have no other money to pay it back, apart from the refinance, and lenders like, well, we think they're probably over leveraged or probably over geared. We don't want to lend. So it's initially when they first came out, it was a straight no pretty much from all the lenders. Now it seems to be, well, tell us a story, tell us what's happened, we'll take a look at it. What they don't generally like is if the loan has been used towards that property transaction. So if it's been used for the deposit, that's a no. If it's been used for the refurbishment, then potentially it's a yes.
Okay, that's interesting. And is there anything else you're seeing around these corona times, these strange times that we're in at the moment, that you want to comment on to do with lending that people maybe are not aware of?
I think the other thing as well is mortgage holidays, just in linking in with the bounce back loans. So I was actually abroad when all of this happened. So I was just reading the news as a spectator, and I saw Rishi on the news say, yeah, mortgage payment holidays. And it seems so easy. He was literally offering you to take a break. But the reality, and saying it's not going to affect your credit score. Now, technically, that's correct. Not going to affect your credit score. However, it will be reported on your credit file. And specialist lending, i.e. buy-to-let and investment properties, is manually underwritten. So an underwriter, when they look at your credit file, and this is why it's important, will see the 3 months as a U unreported, which means you've not paid your payments. Now, again, it's ever-changing. Lenders are getting a bit more flexible as long as there's a story. But essentially, the view was that if you've taken a payment holiday, that's an expression that you can't cover any voids. Bless you, bless you. Let me do that again. Right. So yeah, with a mortgage payment holiday, the mindset was from a lender, from the underwriters, if you've taken a holiday, you are expressing that you have nothing in place to cover voids or any gaps in your mortgage. And they were saying, well, look, if it's a property business, as a landlord, regardless of COVID or any pandemic, you are going to have some voids. You're going to ask for a holiday every time. So that was the initial thought, and I kind of agree with that to a certain degree. But we are seeing more lenders now saying, look, as long as you're off your holiday, we will consider lending again.
Right. That's interesting, isn't it? Because it was there were a lot of, it was daggers drawn, wasn't there, on Facebook, with some people very much against the bounce back loans, and other people, especially wondering what people were doing with them, and other people were very much pro the bounce back loans. Blessing is commenting, and thanks for the great content. Great content, she's saying, Shaz. Thank you. Excuse me, I'll just carry on joking. Did I cut you off, Shaz?
No.
So, and what are you seeing in terms of people coming to you now? Are you seeing that people are still keen to buy, or are you seeing a bit of a slowdown in the number of people coming to buy?
So I'll be honest, I am as busy as ever. Like I've not had any real slowdown. I think the slowdown is probably more with the residential market. So your first-time buyers and your home movers, that's possibly slowed down. But investors are mad. You know, the auction. You see auction prices now. Properties are selling for way over than what they're worth, but people are still buying them. So I've been doing a lot of that, a lot of bridging, a lot of development, and also a lot of refinancing. Also, and I think this is trends picking up, is people are coming back in and looking at mortgages for what you call short-term lets, or service accommodation properties,
Right.
because that did stop. So I think during the pandemic, that was the one type of finance that really got hit hard, because surveyors were like, well, there's no market for this anymore. Lenders pulled their products, but now they're back in. It's becoming very popular again.
Yeah, and there'll be a lot of people traveling, staying within the UK, and so for travel wise,
Staycations, yeah.
Yeah, staycation. So people are going crazy and buying, but I kind of feel that towards the end of the year, when all of the financial supports are tailing off, that the opportunities for buying for investors are going to increase. Rather than now. But it's interesting that the auctions are going so crazy and things are going so high, and that you're still seeing such interest in buying. Tell us a little bit. Did we actually? Yeah, you did actually give me the rates, very low. Tell us what your thoughts are on the future. What do you think people should be thinking about now in terms of property finance? Have you got any predictions or things that you just want to let us know?
I mean, I like to keep things factual, but look, I think so. The furlough scheme is ending in a couple of months. The furlough scheme's ending. That will lead to a lot more unemployment. That will lead to people not being able to buy houses themselves, possibly looking to rent. So I think that will affect the markets. Property prices will go down, I believe, because of that. So again, investors, there's an opportunity there. I think it's important now for people to have what you call a war chest, or money for a rainy day. So, in some sort of account, have maybe 3 months worth of living costs just there, and forget about it. Because if this ever happened again, you want to make sure you can survive and just get on with your life. And also, I think be creative. Like I've done a few deals where people are buying investment properties but raising money against their residential properties, and it saves them money. It's easier, it's quicker, and actually they don't have to get any further valuations done. It's on their existing house. So look at more creative options. Look at what you've already got rather than securing on other assets as well.
And is that something that you help people to sort of strategize on the best approach for a particular deal?
Yeah, look, ideally, I don't want to do just one deal or one transaction with someone. I want to be part of their team and the long-term team going forward. So we would talk about their overall strategy, what they're looking to achieve, how many properties do they see themselves buying in year 1, 2, and 3, and how do they want to get there? What do they own right now? Where can they release the equity from? And it's all this sort of thing. I think, you need to, I always say, always think with the end in mind. Always start with the end first and then work backwards. And you can always achieve your goals that way.
Brilliant. I think that's why you've been so successful, Shaz, because people who are serious about buying and want a partner, they want somebody they can work with. If they see a deal, they want somebody they can say, who knows all their situation and can point to, for this property and this situation and this location at this time, I think this is the right lender for you. So brilliant. Thanks for that help on the property finance side. But before we go off, I did want to just talk on the other thing that you're really well known for, which is the social media aspect of things and how to do that. And I know it is becoming more of a thing, especially in these lockdown times where we're not doing the in-person networking for people to really double down on the social media. So tell us a little bit about the impact that becoming known on social media has had for you, and then we can go on to some of the ways to do it.
So impact wise, I think it means I'm not having to do a sales pitch. I'm not having to sell so directly because I'm giving out the content. And what it means for me, like if I'm honest, I give out a lot of I give a lot away. Like there's no secrets, but I give away the name of the lender, I give away the rates. So in all honesty, you could take that and go to your own broker, and that's fine. But by giving it away, kind of people tend to come to me because it means I'm not dangling a carrot. I'm giving you giving you everything. So by the time they come to me, they're already pre-qualified. They're already kind of bought into me. And again, I've been blessed or lucky or fortunate that I've got clients who will tag me in things and recommend me, and word of social media is strong. So word of social media is a new word of mouth, So that's the impact, is I'm generating business just off the back of giving everything away.
How did you start with this, Shaz? Did you just tell us about how did you come into it? Because you said originally when you first started from Barclays, maybe you're a more introverted character, really, but you've become more out of your shell. But tell us about how you got started at the beginning with the social media side.
It's interesting. I think I just kind of understood that people buy from people, and what's the difference maker? What's going to make me different to other people? Because literally there are hundreds of thousands of brokers out there. So why would you want to use me? What is different about me? And then it's kind of like finding your niche. So what is the one area that you want to specialize in? Because I speak to quite a few brokers, and you ask them, what do you do? What do you specialize in? And they'll just list out everything, and it's like, then you don't specialize in anything. You're not a specialist. You do mortgages. So figure out what you specialize in and go all in on that. And that's what I do. But yeah, I've always been into graphic design, so it kind of, the hobby, I can be quite graphic on Instagram by doing the designs and stuff. So I enjoy it, and when I enjoy it, then it's not so much of a chore.
Yeah, it really is phenomenal. I was going to ask you about those infographics on the Insta where it's swipe across. That you've got me sometimes swiping right, to the end. So, and what advice would you give for people who were thinking, you know what, I want to get some results like Shaz, and have everybody asking, where's Shaz? So what advice would you give to other people?
I would say go for it first of all, because look, there's so many businesses, and unless you're really, really unique in your field and you do something no one else does, you will have a competitor. So how are you going to stand out from that other person? And I think a lot of it is being very secure in what you're doing and knowing that you are good at what you do. Because if you're insecure, then you're not going to give away names of lenders. You're not going to want to give too much away, because then they're not going to come to you as a client. And just be secure. Know that your knowledge, is the value, and you're putting it out there, and people will come. And I think it's do a good job as well. You got to back it up as well. I put a post up the other day. Don't believe your own hype, because once you believe your own hype, then that's the road to failure. So yeah, know that you're good, but know you got to kind of back that up every day with results. So if tomorrow I mess up and totally ruin someone's mortgage application, then that's also news, and that also needs to be shared. And you've got to back it up and manage your priorities. That's why I don't do many videos, because I don't have time. I can do a few posts and I can design those, but videos, it's a case of sitting down, getting the lighting sorted. I've got to do mortgage applications, man. I ain't got time.
Yeah. Totally get you. Shaz, thank you so much for coming on and sharing your value tonight. And tell us, where we've talked about some of the places, but where can people find you if they want more Shaz?
Well, the best places are Instagram and Facebook, and it's Instagram/where's Shaz with 2 S's, and the same on Facebook. I am on LinkedIn. I really should be using that a lot more. I've been thinking, so like most of my clients are probably on Facebook. Instagram is interesting. I think Instagram is a lot of hype, but not a lot of serious clients, if I'm honest.
Mm-hmm.
LinkedIn is more people from the industry, and I'm thinking of using LinkedIn as my own little journal, rants and raves and just moans about what's going on in my life. But I'm on LinkedIn as well, but I don't really use it so much. But Instagram and Facebook is where I share my content. At least once a week, I'll be putting out case studies and just little tips and tricks for you to know what to do. Like at the moment, social housing is very popular. Is that something you're aware of, Stephanie?
Yeah, very much. We don't do it, but yeah, it's obviously we've had some conversations actually with the council and with various charities here, but we haven't found the right partnership as yet. But it is something, yeah, we're definitely open to. So what have been your findings on that side?
Yeah, so I've
Re-lending
been.
social housing.
So lenders typically don't like it because with social
Mhm.
housing, the tenants are going to be potentially vulnerable. So ex-military, domestic abuse victims, homeless, asylum seekers, right?
Mhm.
So the bad press for kicking those people out if they had to is not what a lender wants.
Mhm.
However, it's a little more straightforward now. There are lenders who will entertain it. As long as it's those sorts of tenants and it's not people who may have learning difficulties or need a carer to be living in with them,
Mhm.
that falls into the realm of supported accommodation or maybe a care home, which is a lot more specialist. But yeah,
Mhm.
with the social housing, there are lenders. The rates aren't premium, they're not loaded, but you will have to be at least a homeowner to get onto those
Mhm.
products.
Mm. Brilliant. That's great for bringing in the supported living, because I know that supported housing, because a lot of people are looking to get in that way. So that's brilliant. Thank you so much for joining us, Shaz. It's been really useful. I've loved some of the nuggets in there. One about the exit from lease options with some of the strategies that you've got going on, and some of the other ways that you've structured some of the deals. And that's why it's so important, as has come up time and time again, to work with a broker who really knows their stuff, especially with HMOs and commercial borrowing. It's never been more important than now to have your case presented professionally by somebody who knows the different proclivities of each of the different lenders. So before, as we're bringing it to a close, Shaz, is there anything you'd like to say in closing that you feel like I haven't asked you today?
No, I think we've covered a lot off, to be honest, guys. But yeah, I think if you're new, so if you're doing rent to rent and you're looking to buy, be patient, save up the deposit that you need. Just look for the right deal that works. If you're doing a buy, refurbish, refinance, make sure the numbers work. Work backwards from the end value, and sometimes you just have to start small. You might be renting yourself, looking for a HMO. That's not going to happen. So you just may have to start with a single let and build up. So patience is key.
Yeah, yeah. And what I often say is that the magic of five, it's incredible what you can achieve in 5 years. We often overestimate what we can do in a year and underestimate what we can do in 5 years. But thanks for coming and giving us a taste of some of the ways that you can help and support people with their HMO finance. Thank you for listening and also for watching. And for now, it's goodbye from Shaz. And goodbye from
Bye,
me.
guys. Thanks for having me.
Bye for now.